Dividends actually is what most investors expect. They expect to, apart from capital appreciation and capital gain, they equally expect to uh, collect dividends from the company they've invested in. And so in this video, I want to highlight how dividend reinvestment plans create long-term wealth. And so I want to look at number one. So what essentially is dividend reinvestment plan? What is a dividend reinvestment plan? So a dividend reinvestment plan, allows investors to automatically reinvest their dividend instead of spending it. As the company pays dividends, the investors does what? Reinvest the dividends into the stocks, of the company that paid out the dividends for additional, share ownership. Instead of receiving cash, they do what? They reinvest in the shares of the company that paid out the dividends. There's that's idea of long-term wealth building. Long-term wealth building. The dividend reinvestment plan are designed for are designed for long-term investors who want to compound their wealth over time. By reinvesting earnings to purchase additional shares, leading to exponential growth in the number of the shares owned. As they get the dividend, they reinvest. As they get the dividend, they reinvest. That reinvestment over time will compound to a higher yield at the end of the day. Number two is compounding returns. So in this case, there's exponential growth. Dividend reinvestment plans, capitalize on the power of compounding. By reinvesting dividends, investors purchase more shares, which in turn generate more dividends. Over time, these compounding effects can lead to significant growth in both number of shares as well as the value of your investment. You have increased number of shares and even increased dividends, and that will then translate to a higher valuation for your holding. You also consider dollar cost averaging. Dividend reinvestment plans allow investors to buy more shares periodically, regardless of the stock price. Whenever dividend comes in, you simply buy. As dividend comes in, you simply buy the shares of the shares of the company, and you do it at regular interval, regardless of the prevailing stock price as at when you buy. This reduces the impact of market volatility and ensures that shares are bought at a specific price range. At a specific price range, averaging out the overall cost over time. So you buy at a given range, and then it will average out your buying price over time. If you bought at a height of maybe $10 and at the lows of $5, you have your average, which may be around $7.5 thereabout. So number three is lower transaction cost. So in this case, there's no fee for reinvesting your dividends. Dividend reinvestment does not attract fees. And so many dividend reinvestment plans, offers the ability to reinvest dividends without incurring transaction fees or cost or commission, allowing investors to grow their portfolios without additional cost eating into their returns. It's a wonderful arrangement actually when you can buy without fees, because fees is a typical component of trading. And if you can really avoid it, it will help in generating a higher income, higher returns at the end of it all. So you also take into consideration fractional shares. So dividend reinvestment plan often allows for the purchase of fractional shares, which means that even smaller dividend payment can be reinvested effectively, leading to continuous uh, portfolio growth. When you talk about fractional shares, we're talking about buying a fraction of the unit price of a company. Let's say a company is selling for maybe $300 per share, and you can't afford, and your dividend and the dividend coming in is like $50. So in that case, since you can't afford the $300 per share, so you can buy a fraction, of that share for $50. That's what is called fractional ownership, or fractional share purchase. And number four is powerful for dividend paying stocks. It's powerful for dividend paying stocks. So in this case, you have attractive for sales and for stable companies. Attractive for stable companies. You discover that dividend reinvestment plans work particularly well for established companies with history of stable and growing dividend payout. They have a history of growing dividend payout that will be attractive. And so stable dividends, the stable companies tend to attract dividend investors. So companies in sectors such as utilities, consumer staples, or blue chip stocks offers dividend reinvestment plans, making them ideal for long-term wealth accumulation. You want to accumulate wealth over the long term, then you should be taking advantage of this particular plan. There's dividend growth also. Dividend growth. As companies grow their dividends over time, dividend reinvestment plans allow investors to benefit from an uh, increased income stream. That growth in dividend year in year out will increase your income stream. You have bigger income, have bigger income. Number five is long-term investment horizon. Long-term investment horizon, and this would and would incorporate patience and consistency. Patience and consistency. So you discover that this particular plan, the investment plan, are most effective when used with a long-term investment approach. It's very effective if you're a long-term investor. You keep on compounding. As you get a dividend, you buy stock. Get a dividend, you buy stock. Get a dividend, you purchase stock. So you have a larger amount of shares, shareholding in that company. And that will equally lead to even greater dividends in the future. All right. And so it requires patience. So investors who consistently invest their dividends over decades can build substantial wealth. This strategy rewards patience and a focus on long-term gains rather than short-term fluctuation. If you are a long-term investor, this plan is something worth considering. Something worth considering. Then compounding over time. Compounding over time. The longer the investment horizon, the greater the compounding benefits. So dividend reinvestment plans help investors accumulate wealth gradually, making them ideal for retirement planning or other long-term financial goals. You're planning for retirement, you want to have sufficient income at retirement, I want to have a comfortable retirement, then you should key into companies that offer dividend reinvestment plan. Number six is benefits of dividend reinvestment plan for wealth building. Benefits of dividend reinvestment plans for wealth building. Number one is automatic growth. There's this automatic growth. So this particular plan helps investors grow their portfolio automatically without the need for active management. So once set up, the process runs, on autopilot, making it easier for investors to stay on track with their long-term wealth building goals. So the entire process is kind of automated. Once you've instituted that the process, you discover that everything is done automatically. A dividend comes in, it is reinvested. As the company pays dividend, it is reinvested automatically. So there is focus on fundamentals. By reinvesting dividends on high quality companies, investors can benefit from solid fundamentals and steady growth, which enhances the potential for capital appreciation on the long run. So you have increased number of shares and a higher level of dividends, and this will increase your portfolio valuation, over the long run.